know we were just talking about this. The Fed taking drastic measures to fight inflation. So what will it mean for you? Chairman Jerome Powell, Jerome, today announcing yet another interest rate hike, a steep 75 basis points. They thought he might go to a full point. This, of course, marks the third straight month of increases. That means mortgage payments are up. A 30-year mortgage for a $400,000 home with 10% down. That is now $2,340 a month. That's $200 more than you would have paid yesterday. That sucks. Powell says that's not the only pain coming your way. He's going to spank you.
What is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. You know, higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road.
It's also not as painful as everyone in central banking saying inflation is transitory, when all these other rationalists were running around going, no, it's not. We are headed for disaster. By the way, shout out to Eddie Lawrence. Well done there with that question, young man. Short-term pain for long-term gain. I'll see it when I believe that. Tell that to a single working mom with 2 jobs and no way to pay for Christmas presents. Is Jay Powell the right guy to fix this? The party panel is back. Katie Pavlich, Marie Harf, and Brad Polumbo. Katie, is he still up to it? I'm losing confidence.
Well, the bottom line is because the federal government has spent so much money that this is like a runaway freight train, inflation. And the only way to stop a runaway freight train is for there to be a big crash, which is what we're going to experience. The Fed, I'm surprised, didn't hike interest rates even further to try and blunt this blow. But the reality is that things are just going to become a lot more expensive in America, whether it's inflation continuing to rise, with average American families paying $12,000 more per year, or whether it's just making money more expensive to borrow. So every sector of the economy is getting hit. The labor market, the market for buying new homes, the housing market, nobody is untouched. And so it's really going to suck to wrap it up.
It really feels like we have not learned some of the lessons from the past, Marie. And when you repeat bad history, even worse things happen in the future.
Well, look, I think Chairman Powell is actually trying to avoid that crash, right? He's trying to hold on to some of the good economic news. Gas prices, for example, keep coming down. We've had record job growth. Wages have been increasing. But he's trying to keep that steady while cooling inflation. So he's trying to avoid that crash. I think it remains to be seen whether he will be able to do that. But there are some indicators that inflation is starting to get close to peaking. Like I said, gas prices coming down every day for months now. But on other things, foodstuffs, buying new homes, for example. Yes, interest rates are higher, and that is a long-term play to make things more stable.
And food is more expensive,
hopefully in the next few months, we will start to see. Foodstuffs are not coming down unless it's tomatoes. We will start to see
tomatoes are cheaper.
Food, like cost of other things coming down. I think we'll start to see cost of other things stabilizing in the next few months, hopefully.
Yes, because people won't, they can't afford to eat when they lose their jobs. And this is one of the natural consequences of raising interest rates. You're trying to cool the economy so people can't borrow money, so they can't buy things. And when they can't buy things and borrow money to start new businesses or fund their businesses, that means they fire people. That is also one of the very intentional consequences of what the Fed is doing right now.
Yeah, look, it is, but we're also living through a cost of living crisis right now. And it's sort of a vicious cycle because it starts with the inflation that the government created by running the money printer, spending trillions they don't have, and then people can't afford things, so they run up credit card debt. They get themselves, we're actually seeing a huge surge in credit card debt compared to where we were just last year. And now credit cards, mortgages, anything that involves, borrowing money is going to become more and more expensive at the exact worst time for that to happen. unfortunately, we are going to be seeing this play out for some time, where the long run consequences of this inflation that our policies created are going to cause a great deal of suffering for Americans. And that's what we need to remember. Inflation doesn't just happen. It's not just an abstract economic phenomenon that you read about in the news. It is directly related to our policy choices. And if we don't hold people accountable who got us into this mess with their reckless spending and printing policies, we will be back here again very shortly, and we may never even get out of it to begin with.
Yeah, it's monetary and it is fiscal, and that is the worry, that we do get ourselves into a cycle that we cannot escape. I remember what interest rates were in the 80s. I remember that because there's no economic mobility for the middle class. When you can't afford to borrow money, you can't send your kid to college, even though, loan forgiveness, which is also making everything worse. You can't afford to buy that first home. You can't start a business. And, then the cycle just perpetuates. So it's interesting, though, because with the economy on the verge of recession, it's probably not a great time to slack off at work.